The broadcast is now starting. All attendees are in listen-only mode.
Good morning and welcome to Leavitt's webinar on wellness, recent guidance. My name is Lisa Klinger. I'm one of the benefits attorneys at the Leavitt Group, and today is August 31st, 2016. As the initial announcement told you, all attendees are in listen-only mode. So if you want to ask a question, please type it in the box on your screen. I'll try to check for questions every so often, and also at the end of the session. Today's webinar is being recorded, so you can hear it again later if you so desire. Also, if you do not already have a copy of today's PowerPoint and you want one, please request a copy from the Leavitt advisor who sent you the invitation to this webinar. I know they'll want to follow up with you. And we do offer free webinars to clients and prospects. The next one will be September 8th, and it is on the exchange subsidy notices and IRS notices and appealing the exchange subsidy notice if you get one. So we'll get started on wellness, recent guidance. Let's see. There we go. All right. I'm going to go over the EEOC final rules. Let's see, this isn't showing so well on my screen. The final rules on wellness and the ADA, and wellness and Gina, the Genetic Information Non-Discrimination Act, also the EEO Sample Wellness Program Notice, and also a recent IRS tax memo on wellness incentives and taxability of wellness incentives. And then I'll also be talking a little bit about the background on wellness rule, the wellness rule, which was originally the HIPAA non-discrimination rules for wellness programs in 2006, and then the tri-agency HIPAA wellness final rule as amended by the Affordable Care Act. So before I go through some of the recent things, I want to do a little bit of the background on wellness programs. And let me see, I hope this is showing all right on your screen. It's a little bit to the left on mine. There we go. Again, if you've just joined us, this is being recorded, and if you want a copy of the PowerPoint, please contact the Leavitt advisor who invited you, and I'm sure they'll be glad to follow up with you and send you a copy of the PowerPoint. So a bit of the background on wellness programs. Initially, the general rule, which was under HIPAA, the Health Insurance Portability and Accountability Act, and then that was amended by the Affordable Care Act. So that general rule is that insurers and group health plans cannot discriminate against an individual as to eligibility or coverage based on a health status factor. And those rules are in the Internal Revenue Code, Section 9802, ERISA, Section 702, and the Public Health Service Act, Section 2705. And health status factors include things like medical condition, medical history, claims experience, genetic information, current health status, or disability. But there's an exception to that general rule, and that exception is basically wellness programs, because the exception says that these general non-discrimination rules are not intended to prevent a group health plan or an insurer from establishing premium discounts or rebates or modifying otherwise applicable copayment or deductible amounts in return for adherence to programs of health promotion and disease prevention. And that's what a wellness program is a program of health promotion and disease prevention. So then also, wellness programs are subject to rules under the Americans with Disabilities Act, the ADA. And that applies to wellness programs in a slightly different way than the HIPAA and the ACA rules. And that's why we get regulations under the ADA that are slightly different from or inconsistent with the regulations that were published under HIPAA and the Affordable Care Act. So basically, the Americans with Disabilities Act is a federal civil rights law, and that says employers can't discriminate against individuals on the basis of disability in regard to employment, including compensation and terms of employment, and that includes health benefits. And the ADA also requires employers to provide reasonable accommodation, sure you've heard that term, to individuals with disabilities in order to give them equal access to wellness programs and other fringe benefits and other terms and conditions of employment. The ADA also generally prohibits employers from obtaining employee medical information by making disability-related inquiries or requiring medical exams, unless the information is obtained from a voluntary employee health program, such as a wellness program. And so that's where, with wellness programs, these rules, the new ADA regulations apply, because an employer inquiry, disability-related inquiry, would be a health risk assessment, or HRA, and requiring medical exams could include something like biometric screening. So that's where, if you have a wellness program that includes an HRA or biometric screening or some kind of medical testing, then that brings it into under the jurisdiction of the EEOC, which enforces the ADA. So that's where the ADA rules would apply, and that's why if you have a wellness program, it has to comply with both the ADA requirements and the HIPAA-ACA requirements. And I'm assuming everyone knows these acronyms, but of course the ACA is the Affordable Care Act, HIPAA, the Health Insurance Portability and Accountability Act. As I said, the ADA is the Americans with Disabilities Act. So EEOC is the Equal Employment Opportunity Commission, and DOL is Department of Labor that would enforce the HIPAA rules. So the issue under the ADA is this wellness program voluntary? And if it's not, then the employer cannot make disability-related inquiries, can't have a health risk assessment, and can't require medical exams like biometric screening. And then the other thing the ADA does is it does require employers to keep all medical information confidential. So let me back up for just one slide and kind of take a broader approach as to what exactly is a wellness program. And there are generally, as I said, it promotes good health and helps manage disease. So it's intended to improve health and reduce healthcare costs. And there are a lot of different types of wellness programs and different features of wellness programs. So it could be, for example, that it just encourages employees to engage in healthy behaviors, like exercising more or walking or eating healthier. Or some wellness programs also would be considered medical plans because they obtain health information, like by asking employees to complete an HRA, or by requiring or requesting biometric screening, certain lab tests, blood tests, cholesterol tests, maybe nicotine testing for a tobacco cessation program. Also, a wellness program can be part of a group health plan, or it could just be a standalone wellness program. Either the employer doesn't offer a group health plan, or it offers it to all employees, not just employees in the group health plan. And then the last thing is on rewards or penalties. It's often referred to as rewards, generally it's referred to as rewards, although sometimes it is in the form of a penalty that employers will, as a reward, they could reduce the employee cost for employer group health plan coverage, or they could also penalize people who don't participate in the wellness program or don't meet certain standards or a reasonable alternative standard. So they could penalize people by charging them more for enrolling in the employer group health plan. And then also with rewards, some types of programs just pay the rewards. For example, a participatory program may provide a cash or a gift card or pay for something like a gym membership rather than having any kind of penalty for not participating. There are also two different types of programs: participatory wellness programs and health-contingent wellness programs. And the HIPAA regulations and then the Affordable Care Act really made this distinction and clarified it. So a participatory program is one where the employee just has to participate, obviously. They don't have to meet a minimum standard that's related to a health factor. And like they just have to walk every week or attend a cooking class if they want to, a healthy cooking class. And for a participatory program, there's no limit on the financial incentive amount, and the program doesn't have to meet non-discrimination rules. It just has to be available to all similarly situated employees. And usually there's no issue with no limit on the financial incentive because employers are providing usually fairly small financial incentives, and it's not a penalty, it's just a reward. So it's usually just additional compensation or paying or making a contribution to an HSA account, for example. The other kind of wellness program is a health-contingent wellness program. And under that kind, the person has to satisfy a certain standard or perform a certain health-related activity in order to earn the reward or not have the penalty imposed. And there are two types of health-contingent plans, and that's the activity-only or the outcome-based. So the activity-only, it's still a health-contingent activity, and then outcome-based, the person has to actually meet a certain outcome, like either stop smoking or a test, sign a form that they don't smoke, or take a smoking cessation class. Or they have to meet specific cholesterol or blood pressure rates, or take steps to improve those rates, and that's where that reasonable alternative standard comes in. The regs have said the employer has to offer a reasonable alternative standard for employees who can't meet the standard that they're asking employees to meet. So the HIPAA and the ACA have certain non-discrimination requirements, and then the EEOC, those final regs, have other non-discrimination requirements. And let me just go back and reiterate. HIPAA was initially, the regs were out in 2006, and then the ACA amendments to that were 2012, 10, the ACA, and then 2012 were proposed regs, and 2013 were final regs. And then since then, the EEOC has issued its proposed regs, and then they just issued their final regs in May of 2016. So first we had these HIPAA and ACA non-discrimination requirements, and employers were making sure that their wellness programs met these requirements, and then the ADA in the last couple of years, issued its proposed and final regs and said, well, we have some other requirements that are a little different than the HIPAA and ACA requirements. So if you have a wellness program that's subject to the Americans with Disabilities Act, you also have to meet the EEOC requirements. So the HIPAA and ACA non-discrimination requirements, initially the HIPAA regulations in 2006 said the maximum reward or penalty for a health contingent program was an amount that's equal to 20% of the total cost of coverage. So for the employer and the employee portion of the cost of coverage. So for example, if the total cost of coverage was $100 a month, then the maximum permissible reward or penalty would be 20% of that, or $20. The Affordable Care Act made several changes, which I'm sure you're all aware of. One was increasing that maximum permissible amount from 20% to 30%, and then also up to 50% for tobacco cessation wellness programs. The ACA also required employers to offer reasonable alternative standards that participants could meet to qualify for the rewards, and it changed required a certain notice about the reasonable alternative standards, and then it also distinguished between the activity-only and the outcome-based wellness program. Then the EEOC final rules, the more recent ones, as I said, the EEOC enforces the Americans with Disabilities Act, the ADA, and the Genetic Information Non-Discrimination Act, or GINA. And so if you remember from an earlier slide, the ADA prohibits employers from making disability-related inquiries or requiring medical exams unless such information is obtained from voluntary employee health programs, such as wellness programs. So the EEOC rules address what's voluntary and what the employer has to do in terms of keeping medical information confidential. So some of the main differences between these recent EEOC final rules and the prior HIPAA and ACA rules: the ADA inquiry is whether the wellness program is voluntary, and the HIPAA and ACA rules are looking at what's required to make the program exempt from the non-discrimination rule. And also the ADA and the Gina rules apply to employers with 15 or more employees. So basically the ADA rules, as I said, they apply if the wellness program, for example, has health risk assessments or requires medical exams like biometric testing. But they do not apply if the program doesn't do that. So for example, if you have a smoking cessation program, but it only asks, when did you last use tobacco, but it doesn't actually test for it, then that would not be subject to the ADA. It would only be subject to the HIPAA and ACA rules. And on Gina, those rules apply if a program requests, requires, or buys genetic information about the employee or family members. And that usually comes up if there's an HRA that includes family medical history. So if a spouse is asked to complete an HRA, then the Gina rules would apply. Let me try to just take a look and see if we have any questions so far. Oops. Okay, I don't see any questions. The ADA and the Gina rules, generally the applicability date when they'll apply is plan years beginning on or after January 1st, 2017. So that's what it says. But the reality is that most of the provisions actually apply immediately, because as the EEOC says in its preamble, is that most of the provisions are clarifying existing obligations. So they apply already. But there are two provisions that do not apply until the first day of the 2017 plan year. And one of those requirements is the notice that employers are required to provide under ADA and Gina, and then also the limits on incentives that they limit. The ADA limits it to 30% of the cost of employee-only coverage, so, whereas under the prior rules, it's 30% of the cost of whatever tier of coverage, could be employee and spouse, and up to 50% for tobacco cessation programs. So for this year, for the 2016 plan year, you can still use the ACA HIPAA rules, and you don't have to provide the notice yet. But starting with the 2017 plan year, you will have to provide that notice. Let's see. Why is this not going? There we go. Some of the reasons for why the EEOC issued these rules. Well, the EEOC says in their preamble that they're concerned that some wellness programs are collecting employee medical information, but the programs aren't truly voluntary. And some of the examples were because there's such a high penalty on employees who choose not to participate that it's really coercive. So again, the ADA, the health program has to be voluntary. So that's why the ADA rule really addresses employer incentives and getting employees to take health risk assessments or biometric screening. The EEOC has 4 requirements for what's a voluntary wellness program. So if you have a wellness program that includes an HRA biometric screening or other medical testing, then you need to make sure that your program meets these EEOC rules for what's voluntary. And I'm just going to list them here, and then I'm going to provide additional information on the next slide. So the first is that the program has to be reasonably designed, oops, to do that, let me go back up. Reasonably designed to promote health or prevent disease. And, darn it. The second is that there can't be any gateway program. So you can't deny access to someone, denied access to certain plans or coverages just because they don't participate in the HRA or the screening. The third is that employers have to provide a notice that clearly explains certain things. The fourth is the limits on the incentives, so it can't be more than 30% of the cost of employee-only coverage. And then, additionally, there are two other requirements in the final ADA rule that don't apply regarding voluntariness, and that's the confidentiality of medical information and limits on employers' ability to receive individually identifiable wellness information. So let me look at these in a little bit more detail. The first requirement of a voluntary program is it has to be reasonably designed to promote health. So the EEOC regs say it can't be overly burdensome as to how long it takes or how many nights a week an employee has to do this. It can't be unreasonably intrusive. It cannot be a subterfuge to violate the Americans with Disabilities Act or other laws, and it cannot impose significant costs on employees. The regulations do give some examples of reasonably designed programs. So, for example, if employees just have to answer questions about their health conditions or have a biometric screening that gives them information about certain health risks, such as cholesterol or high blood pressure. Or if the program collects and uses aggregate information to design and offer programs that are designed to help employees. For example, if the HRA reveals that a lot of employees either have, or biometric testing, either are diabetic or are at risk for diabetes, the employer might implement a diabetes or management program. But the EEOC regs say it would not be reasonably designed if the employer asks for information and then doesn't provide any feedback to employees and doesn't provide appropriate programs. Or if the employer really just uses the wellness program to collect data and then about what conditions employees might have, and then uses that to shift costs from the employer to the employee, or only uses it to predict future health costs. So you need to be careful if you're using an outside service that is collecting the data and using it to predict future health costs, but if you're not also providing helpful information back to employees. The second requirement as to what makes a plan voluntary, it can't be a gateway wellness program. And so a gateway wellness program is one where, for example, the employer said, if you don't participate, we have two options. We have an HMO option and we have a self-insured PPO option. If you don't participate in the wellness program, you can only be in the HMO option. You can't enroll in the self-insured PPO option. And that was a tack that some employers were taking, and the HIPAA rules and the ACA rules did not prevent that. But the EEOC rules do prevent that. And an employer can't require anyone to participate. Obviously, then it wouldn't be voluntary. And they can't take any other adverse action against someone, like terminating them or taking other adverse employment actions against people who won't participate in the wellness program. The third requirement for a voluntary wellness program is that the employer has to provide a notice to employees, and it has to clearly explain what medical information will be obtained, how it will be used, who will receive it, and what the restrictions are on disclosure, and what the employer will do to protect the information and prevent unauthorized disclosure. The EEOC did issue a model notice or sample notice, which an employer can use or they can use their own notice. Again, the notice is required before the first day of the 2017 plan year, and then after that you probably need to provide it again annually if you're asking employees to do the biometric screening or complete an HRA annually. So you couldn't just do it once and say, okay, that applies from now on out. There's no specific number of days in advance that you have to provide it, like it's not 10 days in advance or 30 days in advance. But the regs do say you have to provide it to employees before they would provide any health information, and they also have to have it far enough in advance that they have enough time to decide whether they want to participate in it or not. And these requirements for the notice, the requirement of notice was in the proposed regulations that EEOC put out. So some employers may already be including a notice to employees, and you could, if your notice includes all the information, then you could continue using it, or you may want to use the sample notice from the EEOC. Some additional points on the required notice is the EEOC also put out some FAQs when they put out the sample notice. You're not required to have employees sign the notice or acknowledge receipt of the notice. However, some other laws that apply might require it. So for example, if you're asking people to authorize disclosure of the results, which would be protected health information or PHI under HIPAA, then you may need to have them sign an authorization. And also, as I mentioned on Gina, if it includes family history, family medical history, if the HRA does, then Gina requires prior written, knowing, and voluntary authorization. So you have to have people sign some kind of disclosure beforehand. The second thing on the required notice, you can have the wellness provider give the notice if they'll do it and if they have a sample notice. But the regs say that the employer is still responsible for making sure that employees receive the notice. So you may want to somehow ensure that in your contract with the wellness provider. Also, the notice itself has a lot of places where you need to fill in specific employer-specific information. So it's not just a canned notice that the wellness provider could give out. So the employer would have to insert a lot of information on it anyway. The third thing that the FAQs note is that the notice can be provided in any format that will be effective in reaching employees. So it could be a hard copy, it could be by email. The regs, the FAQs say with a clear subject line such as notice concerning employee wellness program. That would be pretty clear. But you can provide the notice at open enrollment, but the EEOC does suggest that you not provide the notice along with a lot of other information unrelated to the wellness program, because then employees might misunderstand the contents of the notice or they might just ignore it. So, and again, you don't have to have employees sign it, so it's not like they'd be signing it and returning it. But so if you have a big packet of notices that you give people at open enrollment, you might need to make this notice separate from that packet, not just include it as one of the 10 notices in the packet. And I know we have a sample packet of notices, Leavitt does, that we provide to employers that you can give to employees at open enrollment. So this particular notice you probably need to have separate from that packet. And the FAQs note that if an employee files a charge with the EEOC and says that he or she was not aware of that a particular medical exam or biometric screening was going to be included as part of the wellness program, if the employer says, well, I gave them the notice, the EEOC will look at what the notice said and all the surrounding circumstances to determine whether the employee understood what information was being collected or should have understood. So if you include it in a packet with a lot of other open enrollment notices and then somebody says, oh, I didn't even see that one, I didn't realize that what this was going to require, that would be a negative factor if the EEOC were looking at how the notice was provided. So I'm going to go through I've actually got in the next few slides the actual wording from the EEOC sample notice. And I know you can read it yourselves. I just want to go over some of the language because sometimes people do not read these notices. They just send them out. And you do need to fill in a lot of information on the sample notice, and I just want to make sure people are aware of what's in the sample notice. So the first thing it says is, this wellness program is a voluntary wellness program available to all employees. Again, it needs to be voluntary. If you choose to participate in this program, you'll be asked to complete a voluntary health risk assessment, and also if there's, if it's applicable, you'll also be asked to complete a biometric screening, which will include a blood test, and be specific about the conditions for which blood will be tested. And if any of those don't apply, just take out that language. And it says you are not required to complete the HRA or participate in any of the medical exams. And then the notice also says employees who choose to participate will receive an incentive, specify what it is, or if there are certain criteria. And even though you're not required to participate, if you don't get the incentive. And then if there are additional incentives, you can say what those are. And then at the end of this page, you may request a reasonable accommodation or an alternative standard by contacting whoever it is and what the information is, contact information is. And both the ADA and HIPAA require this reasonable alternative standard. So in the past, you probably had and distributed a sample notice that was available under the ACA and the HIPAA regulations, and it talked about a reasonable alternative standard. But sometimes that wasn't really a separate notice, it was just included in the wellness materials. So now there is this separate notice, and this really includes the language probably, or if you need to modify it a bit, that includes the HIPAA notice requirements as well as the ADA notice requirements. The EEOC goes on to say the information, the results from your HRA and your biometric screening will be used to provide you with information to help you. May also be used to offer you services through the wellness program, such as, if you're going to have a excuse me, disabilities management program or smoking cessation. And again, one of the ADA requirements is that the information has to be used to help the participant or to help the employer offer needed services to participants. Then the EEO notice also has a section entitled Protections from Disclosure of Medical Information. So I just want to point out, it does say the employer may use aggregate information it collects. So that's not individually identifiable. It's aggregate information. We will never disclose any of your personal information, either publicly or to the employer, except as necessary to respond to requests from you for reasonable accommodation or as expressly permitted by law. It's not entirely clear what exactly is expressly permitted by law. So I would say, and we will not provide the information to your supervisors or managers, and we'll never use this information to make an employment decision, because people may be concerned if the employer has information about their poor health, that may affect who ends up getting laid off at the next layoff. So it is safest if your wellness program includes a health risk assessment or biometric screening, and if you have a data analytics company that analyzes the results, they should not give you, the employer, any individually identifiable information, only aggregate data. So that's, if you're going to do it otherwise, you should probably check with your legal counsels and get their advice as to whether that's okay or under what circumstances that would be. The EEOC sample notice also says your health information will not be sold, exchanged, transferred, or disclosed except to the extent permitted by law to carry out specific activities related to the wellness program. Again, that's not entirely clear what that might be. And you will not be asked to waive the confidentiality of your health information as a condition of participating. So if a participant said, I want to do the health risk assessment, I want to do the screening, and I get it for free, but I don't want the results to be released to a health coach, if that's what would be happening with it. Then that might be an issue. And this also says the only individuals who will receive your personally identifiable information are, and you put in who that is. The last thing is the notice also says how we'll store the information. It'll be any electronic information will be encrypted. If you're not encrypting information, for example, if you use access control rather than encryption, then you probably need to change that line. And then it says appropriate precautions will be taken to avoid any breach. You'll be informed if one does occur. You may not be subject to retaliation if you choose not to participate. And again, if you have any concerns, please contact so-and-so and have the contact information. Well, we're finally done with the EEOC sample notice slides. So now I'm back to the fourth requirement of what the EEOC says is required for a voluntary wellness program. Remember, the program has to be voluntary if the employer is making disability-related inquiries, like an HRA, or requesting health information, like having biometric screening. So the fourth requirement as to what's voluntary is the penalty or reward for participating can't be so high that it would be considered coercive and the program would no longer be voluntary. So the EEOC says the maximum incentive amount, that would be incentive or penalty, is 30% of the total cost of employee-only coverage. And that's the total cost is the employee and the employer contribution. But the difference under the ACA and HIPAA rules was that it was 30% of the cost of employee, if the wellness incentive or the wellness program, like a smoking cessation program or something else, was available to the employee and spouse, then the maximum incentive amount was 30% of the total cost of employee plus spouse coverage. And it also said, the ACA rules also said, for smoking cessation or tobacco cessation programs, the penalty could be as high as 50%, so an additional 20% on top of the 30%. But the ADA rules will not allow it to be up to 50%. So if the program is subject to ADA, it'll be 30%, and it's the cost of self-only coverage, even if the program's available to the spouse. Now, there are several exceptions and special rules. So the three things I want to point out: if you have a wellness program, but it does not obtain medical information, but it's just participatory, like there's no health risk assessment or biometric screening, then the ADA rules do not apply and the HIPAA rules still do apply. So it's their 30% or 50% for smoking cessation. If an employer offers only a wellness program and not a group health plan, then it wouldn't be 30% of the total cost of employee-only coverage. There's an alternative, which is on the next slide. And the special rule for smoking cessation wellness program. So here are the maximum incentive amounts. This may be too much in the weeds for most of you. And if you only offer one benefit option and your wellness program is only for employees who are in that particular option, then only this first line will apply to you. So it's 30% of the total cost for self-only coverage. But the EEOC regs do go into detail if an employer offers more than one group health plan and all employees can participate in a wellness program, whether or not they're enrolled in a group health plan, then the maximum limit is 30% of the lowest cost of the major medical self-only plan that it offers. So that's the 30% of the lowest cost plan. And the third row is if an employer doesn't offer health insurance but wants to have an incentive to get employees to take an HRA or have annual tests, then the maximum is up to 30% of the cost for a 40-year-old non-smoker for self-only coverage under the second lowest cost silver plan on the state or federal healthcare exchange in the location where the employer's primary place of business is. So it goes into the weeds more than some people need, but if it's information you want, then you'll have it in this presentation. The other kind of special rule is on the smoking cessation programs. Again, I'll reiterate probably for the third time, if the ADA rule only applies if there's an HRA or biometric testing. So for a smoking cessation program, if you only ask what's the last date that you smoked or do you smoke and require an employee attestation, then the EEOC rules don't apply, so the reward or penalty is up to 50%. It's the ACA rule up to 50% of the cost of coverage for employee or employee and spouse coverage if the smoking cessation is for employees and spouses. But if the smoking cessation program does do nicotine testing or some kind of biometric testing for the presence of nicotine, then the ADA rules apply and the maximum reward or penalty is 30% of the cost of employee-only coverage. And this was in the EEOC proposed rule, so employers were probably aware that it was certainly possible to be in the final rule, and it is. Again, that doesn't apply until the 2017 plan year. So if you're in a current plan year, you can continue to have the 50% maximum penalty or reward, even if you do testing for nicotine or cotinine. And then that's the end of the 4 requirements for voluntary plans. So then there are also 2 new EEOC-ADA requirements and on confidentiality of medical information. And these were not in the proposed rules that were issued in October 2015. So the first one is, for an entity, a plan that's covered by these rules can only receive wellness information in aggregate form that does not disclose the individual identity and is not likely to, unless it's except as necessary to administer a health plan. And again, it doesn't specify what's necessary as opposed to merely desirable to administer a health plan. And then the second new rule under the ADA regs is an employer may not require an employee to agree to the sale, exchange, sharing, or transfer of medical information or to waive the confidentiality protections under the ADA as a condition for participating, again, except to the extent permitted by the ADA to carry out specific activities related to the wellness program. So what it means is if you do have biometric screening or an HRA and an employee wants to have the biometric screening but doesn't want that information shared with the employer or a third-party data analysis company, then they can still get that screening and you won't be able to share their information unless it meets that exception that it isn't entirely clear what that is. Now the next few slides are just a summary of the differences between the HIPAA ACA rules and the EEOC rules. It's just all the things I just went over in the past several slides, but I put it into a handy-dandy matrix, which maybe program, but it only asks, do you smoke, or are you a smoker or not? Then, oops. Okay, that's a problem. That's what I was concerned about. Let's see what I can do to fix that. Looks like our Citrix just disappeared. Yep. Okay. Let me get that. See if I can open this. I meant to have these open just because we're having issues with Citrix lately. So there we go. I'll catch back up to where we are. Hopefully that's showing on the screen. Jessica, is that showing on the screen?
It's not, Lisa.
Okay, that's a problem. Let's see what I can do. So Citrix just went down. Can I? That's not showing on the screen at all?
No, unfortunately.
Let's see what I can do with that. Is that showing?
Yes.
Yay. Okay. Wonderful. Let's see if I can make that on the whole screen. Okay. Does that still show?
Yes, that looks perfect.
Good. Thank you so much. And are there some other questions?
I unfortunately don't see the questions.
Okay. Let's see. There's a question, but then someone said just saw the answer. Okay. There we go. All right, so let me get us back to where we should be. Let's see, I'm on slide 28. Okay. Smoking cessation. 28. Okay, so these are this is just the pages that summarize what I've been talking about for the last 8 or 10 pages, the differences between the EEOC and the ACA rules. One of the issues was on the voluntary wellness program, and whether an employer can penalize employees who choose not to participate. HIPAA and the ACA regs allowed that. They didn't require it to be voluntary, but under the ADA EEOC final rule, the program does have to be voluntary because that's one of the rules under the ADA. So that's one of the differences. And then the notice requirement, as I mentioned, under HIPAA and the Affordable Care Act, there was just a required notice of reasonable alternative standards for certain types of programs, but didn't include all this other specific information about how medical information will be used or obtained. The EEOC final rule does have that additional notice requirement and the sample notice that I just went through. So, almost getting to the end. New topic, different guidance. The ACA and HIPAA rules are called the tri-agency regulations, and those have garnered most of the attention recently and in the past few years. But also, just in April, the IRS issued a tax memorandum that addressed another issue on wellness programs, and that's the taxability of wellness programs incentives. And that's IRS Memo 2016-22031. And it addressed two things, basically. One is it reiterated that cash and non-cash incentives and rewards that are paid to an employee are not excludable from taxable income just because they're paid under an employer wellness program. They also have to meet other requirements. So, for example, if one of the payments or one of the rewards under the wellness program that the employer pays for a gym membership for employees, that's a taxable benefit to the employee. It doesn't, and needs to be included in their taxable income. It doesn't become non-taxable just because it's paid under a wellness program. The second thing that this IRS tax memo addressed was there have been certain supposed wellness programs that have been marketed in the last year, and the IRS says these are double-dipping wellness programs, and it explains why rewards paid under those programs are included in taxable income. So I'm going to first talk about just the general taxability of wellness rewards. So if the wellness reward is included in taxable income, then it means it's subject to income taxes and employment taxes, like FICA and FUTA. Income taxes, the employee pays the income taxes and or includes it in taxable income, maybe doesn't end up paying taxes by the end of the year, but it's included in taxable income. And the employee pays half of the employment taxes, and then the employer pays the other half of the employment taxes. So if there's money that's excluded from income, then that would save both of them money. And if there's money that's included in taxable income, then that would cost both the employee and the employer money. So if amounts are taxable, they should be included on the paycheck and on the W-2. So the IRS notice said, okay, these are wellness rewards that are included in taxable income. If it's cash payments, even small amounts such as $10 or $25 or gift cards for participating in a wellness program. And I talked with the IRS, one of the IRS attorneys in Washington, and he said one of the tax departments wanted this included because it's come to their attention that employers are not including de minimis cash awards as taxable income, and probably most employers are not. So this is something that the IRS addressed, and I don't know what, I mean, I know that some employers have said, well, we're still not going to include that because we just wouldn't bother with it if we had to do that. But that is one of the things that the IRS notice addresses. The other is that it also says non-cash rewards, if they're not medical care, as defined under Internal Revenue Code Section 213. So, for example, payment for a gym membership, unless that would be medical expenses for that particular individual. So, also, if there are payments or reimbursements through a wellness program that reimburse employees for a portion of the premiums they paid by salary reduction, and I'll talk about that on a later slide, those would be includable in taxable income. So what type of wellness rewards are excludable from taxable income? Well, the notice specifically says benefits and services and non-cash rewards that are medical care, as defined under Section 213. So, for example, if the wellness program pays for biometric screenings or smoking cessation programs or health risk assessments, that would not be taxable income to the employee. And also, rewards or incentives that qualify as de minimis fringe benefits. But that's not cash or gift cards. That's other de minimis fringe benefits, such as like T-shirts or water bottles or things like that, where the value of it is so small that it would make it unreasonable or administratively burdensome to have to account for them. Then there are two other types of wellness rewards that I just want to mention that are not addressed in this particular tax notice. But one of them is premium differentials. And that's, for example, where the group health plan, if an employee participates in the wellness program, that results in a premium reduction for the group health plan premium. And actually, those amounts are included in the taxable income of employees, but we probably don't, often people don't think of it as that, because really, for example, if the employee receives a $30 a month premium discount or a $100 a month premium discount, it just means that the employer receives that amount as taxable income. They're not paying for it, they're not through their paycheck, so it's just taxable income. So it is subject to taxes, but sometimes we don't think about that because it's so obvious. The second thing is sometimes employers make additional contributions to employees' HSAs if they participate in a wellness program. And those, the employer can only do that if the cafeteria plan non-discrimination rules apply. If the comparability rules apply, then the employer can't do this. And the comparability rules, and let me go back to that, as long as the cafeteria plan non-discrimination rules apply, and then these employer contributions to the HSA would be not taxable as long as they meet the non-discrimination test. So if only your highly compensated people participated in your wellness program, and then the employer only made HSA contributions for those highly compensated employees, then they probably would end up being discriminatory. You'd have to look at your non-discrimination test. And once the money is in the HSA, if the employee then took a distribution from the HSA and it was not for medical expenses, then those amounts would be taxable to the employee when they took the distribution. But the employer making the contribution would not be taxable. And if employees can make an HSA contribution to themselves through a cafeteria plan, like pre-tax payroll reduction, then the cafeteria plan non-discrimination rules apply. so the employer could do this. And I think most employers set up their plans that way. But if an employer had a plan that didn't allow employees to make pre-tax payroll reduction contributions to the HSA, then the comparability rules would apply, and the comparability rules would not allow additional HSA contributions for wellness participation. The other thing I want to mention under these plans, wellness programs, is there are these questionable wellness programs. And that's one of the big things that this IRS tax memo addressed. And I'm just going to address it in a few slides because I think most employers are not doing this. But if you do have an outside vendor who's trying to sell you this type of wellness program, you should talk with your legal counsel about it and follow their advice, because it's probably not okay. But it's a wellness program that claims to reduce an employee's taxable compensation. It basically says it allows employees to take money out, often, $500 or $800 a paycheck, and make it not subject to taxes. And then they use that money to buy into the wellness program. And then the wellness program pays a cash reward, which is sometimes called a reimbursement, for people who engage in specified wellness activities each month, like biometric screenings or health risk assessments or talking with a health coach. But employees aren't paying anything when they engage in these wellness activities, so they're not really being reimbursed. And the IRS says they're just being reimbursed for the pre-tax premiums that they paid, and then that's taxable under prior rulings. So, and also the maximum monthly cash reward just happened to be equal to the pre-tax salary reduction amount that employees paid minus an administrative fee. So it's a complicated wellness program structure, and the program itself is legal. There's nothing illegal about it. It's just that the wellness rewards that are paid to employees really are going to end up being taxable in the IRS's view. And so at the end of the year, the employee, or after the end of the year, the risk is that the employer or the employee will end up with tax problems with the IRS, and then they'll wish that they hadn't spent that money, paid that money. So, and some of the programs also allow the employer or the employee to buy other insurance products with the money that they're supposedly saving by not having to pay taxes. So if you do have, if someone approaches you about that kind of plan, definitely look twice at it and get advice from your legal counsel. So I'll just close by saying action items for employers on wellness programs. If you have a wellness program, if you have a tobacco cessation program and it does test for nicotine or cotinine, then that's a medical test. And beginning in 2017, the 2017 plan year, the ADA limit will apply, and so the maximum award or penalty is 30% of the cost of employee-only coverage, not the 50% of employee or spouse coverage that's allowed under the ACA. If you have a non-tobacco wellness program that includes HRAs or biometric screening, then those ADA rules will also apply, the Americans with Disability Act rules. And for example, the limit, the voluntary criteria, the notice, you have to provide that notice, the confidentiality of medical information. And if you request that spouses complete an HRA or biometric test, then the Gina rules apply. So the spouse will have to sign the Gina authorization beforehand. Also, I urge you to review your wellness incentives and determine if they should be included in taxable income. And at last, if you're considering one of these wellness programs that allows employees to exclude large amounts of money from taxation and then reimburses them the amount, then you should get your attorney's advice on that. And this is just a listing of the recent wellness guidance with the links to some of the recent ones, IRS memo on taxability and the sample wellness program notice. And again, this is being recorded. It'll be available in a day or two. We also make it as it's an MP4 file initially, and then we make it into a YouTube video because that's easier for people to access. And if you do want a copy of this presentation, please contact your Leavitt advisor, and I'm sure they'll be glad to follow up with you and give you a copy. So that is it. I think I don't even see any additional questions. So thank you very much. Our next webinar is September 8th, and that will be at 11 o'clock instead of 10. And that will be on the subsidy exchange notices and what you need to do if you want to appeal them or decide if you should appeal them. So thank you very much for tuning in, and hopefully I'll talk to you again in a week.